Here we have the hourly price chart for Super Micro Computer Incorporated, stock ticker SMCI. As we can see here, the stock is trading under some selling pressure here. But if you're familiar with what's going on in the market today, these declines are actually not that bad compared to what we're seeing in many other names. I've just finished videos on Nvidia, Apple, Broadcom, Meta Platforms. Meta Platforms has taken a real dive here. There are some many stocks throughout the technology space that are trading under heavy selling pressure today. Um, but we're not really seeing that to the same extent in super microcomputer. And it's interesting because anybody that's familiar with this stock's history knows that are some tremendous two-way price movements that tend to happen in this stock. And there can be a lot of volatility associated with SMCI, but for whatever reason, we're really not seeing that occur today. And it's a bit surprising. I mean, we're seeing much more, we're seeing volatile activity in Apple, but we're not seeing it in SMCI. I mean, it's not a normal scenario, not normally what you would see. But it's very interesting here that this does seem to be occurring. Currently, we're trading at just below 880 overall in the share price action. We have broken below the 20-hour exponential moving average. That would be this yellow line here. But for the most part, the downside has been contained by the 50-period exponential moving average, which is the orange line. And even spike lows are really being contained by the 100 period EMA. So for the most part, we are kind of now caught in the middle of this exponential moving average cluster. I do think that we'll probably see some downside here. But what's most notable is just the fact that, you would probably expect to see, more volatility in super micro than you would see in a stock like Apple or something like that. And that's just really not been the case here. We are seeing some buying activity. Um, Overall, there is selling pressure. I don't want to take away from that point. If we look at the trading volumes here, we can see that negative sell action it does outweigh the buy action that's been seen, but it's fairly well balanced. These selling this trading volume on the sell side is not as bad as we've seen in the past. Even though this is mostly a down day for the broader indices. The S&P 500 is trading lower. The Nasdaq is definitely trading lower. And then some fairly notable technology names are trading lower within that sell-off. So currently, we do need to kind of identify some price zones here to try to figure out where we could be heading next. Overall, this broader uptrend that I've been watching here remains intact. We haven't really done anything to damage this uptrend, even though it's fairly modest in its sideways kind of characteristics here. I mean, this isn't really a significantly strong uptrend here, but we do continue to post higher lows, which is significant. I mean, if we're looking for an uptrend or the potential for turnaround, generally what I'm focused on more is the higher low rather than the higher high. Higher highs are always nice if you're long a stock, but if we're looking for a reversal point, and that is what would need to occur here, because we have seen some fairly significant declines in this name. As we can see here, there was a very broad sell-off here. Um, but overall, what I would be looking for, what I prefer to see, would be a series of higher lows. To me, this is really what is required to form a base. I would rather see a strong base form than higher highs. Higher highs are nice and they do give you an opportunity to take profits at higher levels. But sometimes if you don't do that relatively quickly, those highs can start to evaporate, especially if we start to see reversals near the elevated price zone. And as we know with SMCI, that is exactly the type of thing that can occur. There are many instances in this stock history where we have seen spike highs that have been short-lived. We can just point to one here, which I've been calling a false breakout. This would be the high that was posted on the 20th of June. Here we can see that we had a bit of a false breakout above this uptrend channel here, and then prices quickly reversed lower. So, this is a very good example of why I prefer to see higher lows rather than higher highs. I just think it's a more like a safer trading environment for a stock. And when you're dealing with something volatile like super microcomputer, that is really what you need to see in order to justify long positions. So currently, the price levels that I'm looking at would come in roughly 860. This would mark the price low relative to the gap in share price action that was seen on July 8th. It's a bit of a small gap. It's not a huge price gap, but if we do see prices below here, we could start to target a full retracement of that gapping area, and this could easily send us below the 850 mark. If that were to occur, we would also be trading below the exponential moving average cluster, as we can see here. I can draw a line here to make that a little bit easier to see. But at that point, we would have lost moving average support from all of these exponential moving averages. And then more than likely, we would be coming into contact soon with this uptrend line. So that would be sort of a moment of truth type of situation here. Um, are we going to actually be able to maintain this uptrend? It's fairly modest, but we have consistently seen higher lows here, and that should continue at least for the near term. But I would start to be a bit concerned here if we do fall into this price cap zone below 860, because that could definitely signal a retracement deeper below the 850 level, and then this would cause some critical levels of support to be broken. We've already broken some of these. I mean, we can't deny that either. We do have the a break of the 20-hour exponential moving average, the yellow line, and the 50-hour EMA. So there is definitely scope here to see the rest of these moving averages start to break. Of course, that would not mean that the overall uptrend would be complete. We would still have the opportunity to bounce off of these lower price zones, and to bounce off of this trend line. I mean, we do have historical support, coming in just below the 800 level. So it would stand to reason that we could see a bounce here from the 800 mark if we were to see a decline that far. Currently, the indicator reading is mostly supportive. We do have some shorter term downward bearish momentum indications here, but the longer term indicator reading does still suggest, that upward price moves are the most likely scenario. So here's the current market analysis for Super Micro Computer Incorporated, stock ticker SMCI.